Now this is to do with EU legislation, and what it's to do with is a couple of sections in the Taxes Consolidation Act. 590 is one of them, 806 is another, and 579. 579 and 579A attribute income of a foreign trust to the Irish beneficiaries. 590 attributes gains of a foreign company to the Irish owners, and 806 attributes income of a foreign company to its Irish beneficial owners. Now the net result of all of this is that revenue, when they see somebody in Ireland has a foreign company receiving income in his place, the revenue can tax that income as if it's his. So in a very simple example, let's suppose you were due to receive £1 million from some customer in America, and you tell the customer, don't give the money to me, put it into my Virgin Islands company, and here's the bank account. And that money isn't coming to me, it's coming to my Virgin Islands company. The revenue can attribute the income of that company to you. Okay? And similarly, if you have a foreign company like that, let's say your Virgin Islands company owned foreign property and sold it, then the revenue could attribute the gains of that company to you under Section 590. So, that's all well and good. And generally speaking, there's no issue with the revenue applying this legislation in relation to non-EU entities. But when it comes to the EU, like for example, if you have a UK company which you control, which is trading in the UK, you don't want the income of that company being attributed to you, because then you're paying income tax on the income earned by your company. So there's been a tension between revenue and the EU in relation to how far you can go when you set up a foreign holding company or a foreign company and carry on activities through that company. I'm sure lots of you have clients that have foreign companies and they're carrying on business through them, and there's not a concern. But it's within the capability of revenue to attribute income and gains of foreign companies to the Irish owners. So what this section is saying is that revenue will not look to apply anti-avoidance legislation if the non-resident person, which is the foreign company, is carrying on a genuine economic activity in the other EU countries. So, like for example, if you have a holding company in Malta, holding company in Cyprus, this kind of thing, revenue could potentially attribute income and gains of that company to you. So how do you make sure this doesn't happen? Well, you need to make sure that you're carrying on genuine economic activity. So what is that? That means having a premises, having staff, having equipment. So if revenue want to challenge setting up entities in other EU countries, the UK have tried to do it and haven't got away with it. There's a number of cases, and they're discussed in an article by Tom McGuire in the most recent Irish Tax Review, where he talks about attribution of income and, you know, the extent of how far revenue can go. And there's a case, an EU case called Cadbury Schweppes, where Cadbury Schweppes in the UK had a subsidiary outside the UK paying lower tax. And the question is, can you do that? Can you use the EU to set up entities in other countries and use the freedom of movement of capital to do that and to pay lower tax? And the answer is yes, you can. And the answer is revenue have a very uphill battle trying to fight the institutions of the EU, because it's within the fundamental freedoms of the EU to be able to do that, to set up in other countries, etc. Now there's another case called Equium, EQIOM, which Tom Maguire discusses as well, and that's worth looking at as well. So we may see revenue begin to attack or look at foreign holding company structures in a few years' time. Personally, I wouldn't have too much to fear about it, because the biggest proponents of this type of tax avoidance are actually the revenue themselves, when they encourage multinationals to locate in Ireland. So, you know, if they were to succeed in punishing Irish people who use EU legislation to avoid tax, well, then they would have to punish themselves also. So it would be good to see the revenue applying their own legislation to themselves, which would be quite interesting. I wrote about this on my blog there last year or the year before, which was it was under an article called "Quis Custodia et Custodias," who guards the guardians, and about this whole issue, because you know the revenue themselves are the largest proponents of tax avoidance in many ways, and have been for years. They're making out now, you'll see later on in the Finance Act about the base erosion and profit shifting, that they're getting into line on that.